Money Ki Baat, Banking Ki Baat, February 25, 2017. Commercial Banks and Payments Banks. I am G. Ramachandran, Ramach to my associates and to my friends. My email, indiagrow@gmail.com, and my Twitter @ramachgramach. Let's go back to recommendation 5 of my presentation on India's digital money system. Here's a design that I made on February 22nd, 2017. India should keep out banks, payments facilitators, and other institutions and instruments that seek to earn ad valorem fees on digital payments. Ad valorem fees on digital payments will destroy India's digital dreams. The Prime Minister's Mann Ki Baat is on February 26, 2017, and we are on National Highway 6, NH6. With the spirit of NH6, which crosses many boundaries and connects many cities. No boundary and no barrier will stop us from connecting India with Indians. And no boundary and no barrier should stop us from building India for Indians. The NH6 connects people in thousands of places. It's an amazing maze, a wonderfully laid maze, very efficient. It connects, it carries. The toll we pay to use NH6 is proportionate to the amount of highway we consume. We pay so that our investment is in great shape, the roads are good. We pay because we are served by NH6. We know there is no free lunch. We are not carpetbaggers. We are not freeloaders. We believe in enterprise, effort, ethics, risk-taking, risk management, and in a logical and sustainable reward-to-risk ratio. We are not freeloaders. We believe in enterprise. We believe in getting paid for what we do and how we serve. The toll is not proportionate to the wealth and incomes of people that use the highway. Similarly, the toll is not proportionate to the value of the cargo that moves on the highway. Whether it's an empty truck or a fully laden truck, we pay the toll because the highway gets consumed. We will design India's digital money system with the same logic, same diligence, great decency, wonderful discipline, and unshakable determination. Towards this, we need to know about money and our needs. We need to know about savings and our needs. We also need to know about banks and banking so that we understand how commercial banks are different from payments banks. We need to know about money and our needs. We discovered in GMT, Government Money and Taxes, on February 6, 2017, that money enables us to fulfill the production and consumption needs of everyone in society. Recall the wheat farmer and the school teacher. Since everyone in society needs money, including government, government issues all the money and plays the role of a common counterparty to all. This is what we discussed on February 14, 2017, when we had the genesis of money and the genesis of government as the issuer of money. Government and its monetary institution, the Reserve Bank of India, RBI, issue all the money. There's a common counterparty and a guarantor. And consider this specimen, 2000 rupee currency bill. It's guaranteed by the central government, and the governor of the Reserve Bank of India signs. He says or she says, I promise to pay the bearer. Else it is not solid. This money is not solid. It gets weakened. We now know all about money. Now we need to know about savings. We save because our productive lives are limited. Our retirement requires funding. But unfortunately, money does not make money. When we keep money under our mattresses, inside the steel boxes and inside the steel cupboards, the amount of money remains the same. If you stored 100 rupees, you're going to have 100 rupees without any change. And now consider inflation, the impact of inflation. When we keep money under our mattresses and inside the steel boxes and steel cupboards, we notice that the rupees 100 remains the same. It's not a great idea. So let's start with this. Let's store rupees 100 today and keep it there for a year until February 26, 2018. In this year, we'll assume that food inflation is 3.17%. Therefore, our money has to grow into at least rupees 103.17 on February 26, 2018 in order to retain its purchasing power. So we need someone who comes forward to use our money, that little amount, the tiny amount of rupees 100 for a year, promises to pay at least rupees 3.17 as interest, and promises to repay the entire principal of rupees 100 on February 26, 2018. Else, inflation could erode our purchasing power. Let's now consider equity investments before we keep them out of this discussion. Our money has to grow into at least rupees 103.17 on February 26, 2018. But the unfortunate aspect of equity is it does not promise to pay dividends, not a known dividend at all, and equity does not promise to repay the principal of rupees 100 on February 26, 2018. So investing in equity will not take care of our needs next year. So we need a commercial bank, or we need commercial banks. Commercial banks act as intermediaries between us and the borrower. Else, we will waste a lot of our time looking for a creditworthy borrower who needs this wonderful amount of rupees 100. Commercial banks save us in two brilliant ways. First, our bank has a list of creditworthy borrowers. It has great experience in data analysis, business cycles, screening loan applicants, documentation of loans, lending, and then managing collateral, and then recovering loans. It knows a whole lot about lending and recovering. It also knows a whole lot about good borrowers. There's a second wonderful way in which the bank serves us. It packages our tiny savings of rupees 100 and makes it into a very big amount by combining deposits. Consider this. There's a deserving and wholly creditworthy borrower in Gopalpur in Odisha, a tourist guide. Our bank lends rupees 75,000 for 4 years to this tourist guide, even though we had only a 100 rupee deposit for a year. By combining many deposits across many time frames, the bank is able to lend 75,000 rupees. That's a wonderful service. The tourist guide now buys a small boat and offers a commentary while tourists are on the boat and on the spectacular Chilika Lake in Odisha, watching the flamingos, the wonderful flamingos. This is Chilika Lake for you. Great, great, great sunrise. We are facing the east now. It's a wonderful eastern sunny morning, a sunrise. And to get to Gopalpur in Odisha, we will drive along NH6 and then turn south to Gopalpur. NH6 does many things, including this little journey to Gopalpur. And we now need to discuss the commercial bank's business model. There's no business for the bank without depositors. In order to get the 75,000 rupees, the bank needs multiple depositors. There is no business for the bank without borrowers. How else would the bank be able to lend and give us an interest of some number? We'll see that shortly. We need to get at least 3.17%. So both depositors and borrowers are the bank's customers. The commercial bank sets the deposit rate at 5% per annum. The commercial bank sets the lending rate to the boat owner and tourist guide at 9% per annum. The gross interest margin, therefore, is 9 minus 5%, which is 4% per annum. Let's continue with the bank's business model. The commercial bank sets the deposit rate at 5% per annum. If it sets this rate at a lower number, depositors will go elsewhere. The commercial bank sets the lending rate to the boat owner and tourist guide at 9% per annum. The 9% is based on the base rate of 5% that's paid to the depositors. It's also based on the riskiness of the loan. The higher the risk of the borrower and the risk of the collateral, the greater is the lending rate. If the bank sets the lending rate too low, the bank may lose. If the bank sets the lending rate too high, the borrowing boat owner and tourist guide would go to another lending bank. Therefore, the commercial bank has a tough job to do. The gross interest margin of 4% per annum requires a lot of judgment, a lot of risk taking, and a whole lot of monitoring and lost sleep. When the borrower defaults, the ability of the commercial bank to honor the checks, the withdrawal slips, and the ATM and debit card swipes is also impaired. So the lending bank also faces the default risk of the borrower. The commercial bank now has to initiate legal action to repossess the boat. Upon repossession, the boat may not fetch the unpaid loan amount and the unpaid interest. Therefore, fund-based income is no fun at all. It's not fun at all. The gross interest margin of 4% per annum requires a lot of judgment, a lot of risk-taking, and a whole lot of monitoring and lost sleep. The bank has to pay for the employees, especially the credit officers and the risk managers, the principal office, which is part of the establishment cost, the branches, the lighting, the air conditioning, the vaults, the cash trucks, the cash chests, the security, the computers, the stationery, the backup power, and the legal team. It's a tough job indeed to run a commercial bank. What remains now after paying for all of these may be about 2% per annum. The gross interest margin was 4% per annum, and after all the costs, it may be about 2% per annum, if at all. 2% after a year of slogging, after a year of hard work and vigilance, if at all. It's hard work, knuckle-breaking hard work. Consider the State Bank of India, SBI. I have numbers for the 4 years 2013 to 2016. The gross interest and investment income in 2016, 1,63,685 crore rupees. And now we have to pay interest on the deposits and other borrowings, which is 1,06,803.49 crore rupees. And then we have to pay for employees and establishment expenses, which is 41,782.37 crore rupees. Therefore, the net interest income NII that remains with the SBI is 15,099.45 crore rupees, and this represented as a percentage of deposits and other borrowings is merely 0.77%. The net interest income represented as a percentage of deposits and other borrowings is merely 0.77%, and we have not reckoned with the incidence of bad loans. So this is before provisioning for bad loans. Fund-based income breaks the heart and the spine. Consider the SBI again. The gross interest and investment income remains the same. The interest paid on deposits remains the same. Employee and establishment expenses remains the same. The net interest income is 15,099.45 crore rupees, and now we have to consider provisions and contingencies, P&C, for bad loans, which in the year 2016 was 29,483.75 crore rupees. Therefore, the net interest income after provisioning and contingencies is this negative, minus 14,384.3 crore rupees, and this as a percentage of deposits and other borrowings is negative, minus 0.74%. The SBI has a negative net interest income after provisioning and contingencies when you represent it as a percentage of deposits and other borrowings. Being a commercial bank is not easy. SBI has invested in world-class technology and world-class people. SBI issues debit cards and credit cards. SBI knows all about payment gateways. SBI knows all about digital payments. SBI knows all about financial networks, clearing, and gross and net settlement. And consider this, SBI is the government's treasury agent and knows how to stand in as the RBI when and where required. But none of these is going to help the SBI. Being a commercial bank is not easy, but SBI is no slouch. SBI lends big time to our economy. SBI bears enormous principal risk. What would India be without the SBI? What would India be without the SBI? Yet, its net interest income as percentage of deposits and other borrowings is less than 1%. It's less than 1%. Look at this. Before provisioning and contingencies, it's positive at 0.77%. And once you consider provisioning, it's negative 0.74%. It's terrible being a commercial bank. The risks are enormous. The rewards are not commensurately big. So the RBI has put in place a policy that enables the creation and licensing of what are known as payments banks. They don't have to lend. Being a payments bank is easy, absolutely easy. So here's what we have as policy announced on November 27, 2014. The objectives of setting up of payments banks will be to further financial inclusion by providing small savings accounts, payments and remittance services to migrant labor workforce, low-income households, small businesses, other unorganized sector entities, and other users. A payments bank is defined as a monetary intermediary. And a payments bank is an intermediary in the age of disintermediation. How wonderful, isn't it? And the minimum paid-up capital for the payments bank shall be rupees 100 crore, and its outside liability should not exceed 33.33 times its net worth. That means it can leverage, through deposits, of course, acceptance of deposits. Acceptance of demand deposits, the payments bank will initially be restricted to holding a maximum balance of rupees 1 lakh per individual customer. And the payments bank can lend to the government, no risk at all, but the payments bank cannot lend to households and businesses, therefore no sleepless nights. The payments bank cannot issue credit cards, therefore no receivables problem, hence no sleepless nights. So no sleepless nights at all for the payments bank. They're pure and simple monetary intermediaries, licensed to make money without bearing any risk. So we're now shortchanging all the banks that bore the risk and built India, and now we're ready to reward those institutions that don't have to bear any risk at all. And what about the customers? They will have current accounts and savings accounts. Payments bank can issue ATM cards and debit cards that the customers can use to withdraw money or to move money. And will they pay for it? Let's consider this here. They're pure and simple monetary intermediaries, licensed to make money without bearing any risk, and the only investments that payments banks need to make, the operations of the bank, should be fully networked and technology driven from the beginning, conforming to generally accepted standards and norms. I'm sure the SBI will meet all the criteria, except that it didn't have the technology from the beginning. That's before 1947. In any case, let's continue here. The payments bank should have a high-powered customer grievances cell to handle customer complaints. So they expect complaints there. Customer grievances cell, and that's probably why cellular telephony companies are among those that have received the RBI's approval to set up a payments bank. Cellular telephony and customer grievances cell. And what about their earnings on cash? We do not have to pay to upload our cash. How nice they are and how fortunate we are. But we have to pay to withdraw our own cash. From a high of 1 rupee per rupees 10, that's 10%, a whopping 10%, to a low of 0.65%. That looks mild. This is a real schedule from a real payments bank, but it would be inappropriate to name this payments bank. And for all the hard work that the SBI does, it doesn't earn 1% after a whole year. But with a single swipe, a payments bank can earn 0.65%. Great, isn't it? Absolutely great. What about their earnings on funds transfer within the network? We do not have to pay to transfer funds within this payments bank to another beneficiary within its network. How lucky we are, how nice they are, how fortunate we are. But when money moves from one network to another network, we have to pay 0.5% of the funds transferred for all transfers in excess of rupees 1,000. Therefore, the payments bank has in place a toll system that moves money as cargo but charges the user by the value of the cargo. The more you move, the more you pay. By weight, it's not the number of times, it's just the weight. If you moved 10,000, you will pay more than if you moved 9,000. Of course, every business needs a revenue model. The first question is, in a technology-driven era, if the payments bank has to spend more effort to transfer rupees 3,000 than to transfer rupees 2,000 to another network, you got to answer this question. And the second question is, if the payments bank faces any rising risk when the transferred amount rises from rupees 2,000 to rupees 3,000. Incidentally, the bank bears no risk at all. The customers bear all the risk all the way, and if there's any snafu or malfunction, you got to go to the customer grievances cell. But the bank will get paid. In proportion to the money that's moved. And the payments are not guaranteed by the central government. All that we have is a grievances cell. I'm reminded of a cartoon by Matt, the pocket cartoonist of the Daily Telegraph. This is a scene where a customer at a department store produces a card, a debit card, and gives it to the checkout clerk, a checkout employee. The store checkout employee then tells the shopper, "Your card is fine. I'm just checking that your bank hasn't expired." We live in an era where a bank can expire, and it can expire with all of the customers' monies. We have to trust the payments bank. We bear the risk, but we pay the payments bank. Is that why it's called the payments bank? And there's one more major deficiency in this pursuit of this payments bank model. Realization 1 from India's digital money system, here's the design. Government would know that a transaction has two sides, the seller and the buyer. Government would know that a transaction has two flows, the payment to the seller and the delivery of the goods or services to the buyer. Government has an interest in the delivery of goods or services to the buyer because that's the leg that captures the goods and services tax. And we need to pay attention because the digital payments model propagated by, supported by, reinforced by the payments bank takes care only of the first leg, the payment to the seller. The payments bank is a financial beauty. It may be a resounding success. It's so alluringly simple, you can make a lot of money. But it would serve merely the payment side of a transaction, the flow of money from buyer to seller. It will not serve the delivery side of a transaction, the flow of goods and services from seller to buyer and all the documentation. And if it did, it may well add insult to injury. It may well add insult to injury. That's the model that a payments bank has. We will wait. We will hear what the Prime Minister has to say tomorrow. India should not repose faith in systems that add transactions cost with digitization as a motive. India should seek to serve multiple objectives with lean and reliable systems. Think of PSLV C-37 on the 103 or 104 satellites. We need to think of it that way. Thank you for your time. I'm G. Ramachandran, Ramach, and my email is indiagrow@gmail.com and Twitter @RamachGramach.